Global share markets hit record highs in June as a de-escalation in Middle East hostilities supported risk sentiment. A trade truce between the US and China, continued spending on artificial intelligence, bank deregulation, prospective tax cuts and growing expectations for a near-term lowering of borrowing costs drove gains in shares of technology and financial companies. MSCI's gorge of stocks across the globe rose by 5.5% in June, the most in 19 months, and hit an all-time high after a ceasefire between Israel and Iran appeared to be holding, reducing the risk to global oil trade flows. Israel launched a surprise attack on June 13, wiping out the top echelon of Iran's military leadership and killed leading nuclear scientists. Iran responded with missiles that pierced Israel's defences in large numbers for the first time. The US conducted airstrikes in Iran's nuclear facilities a week later, with US President Donald Trump announcing a ceasefire agreement, bringing a truce to the devastating 12-day conflict. Global oil prices were volatile on concerns that either Israel or Iran could attack energy export infrastructure or obstruct shipping through the Strait of Hormuz, disrupting oil and gas supplies. The Middle East conflict sent crude oil prices above $80 a barrel before sliding back to $67 a barrel. In aggregate, the global Brent and US NYMEX crude oil benchmarks gained around 6% and 7% respectively during the month of June. US share markets closed June at record highs as hopes for trade deals and possible interest rate cuts eased investor uncertainty. US trade deals with China and the UK have fueled optimism that an all-out global trade war can be minimised, with hopes for more deals to be reached before US President Donald Trump's July 9 trade deadline. US Federal Reserve Chair Jerome Powell provided 2 days of testimony to US lawmakers on Capitol Hill. Bets on a July interest rate cut rose modestly after Fed officials Michelle Bowman and Christopher Waller both signalled they were open to the possibility of easing monetary policy. Powell said the recent run of weaker than expected US economic data would likely have justified cutting rates were it not for concerns about higher tariffs, which may fuel price rises. In the federal funds futures market, traders priced in a roughly 21% chance of a rate cut at the July meeting and a 94% chance the Fed will ease in September. For the rest of the year, traders factored in about 66 basis points in rate cuts. In June, the 10-year US Treasury yield fell by 16 basis points to 4.24%, with the 2-year yield down 18 basis points to 3.72%, the largest monthly fall since April, while for the June quarter, the yield fell 17 points. For the first half of 2025, 2-year yield sank 52 points, the biggest decline since the end of 2019. In the month of June, the S&P 500 index rose by 5%, recording a second successive month of gains. From April 8 tariff-induced low, the US benchmark index rallied 24.5% through to all-time closing highs above 6,200 points at month end. Technology stocks shone, with chipmaker Nvidia soaring 16.9% to notch its first record close since early January and retaking the title of the largest company by market size, ahead of Microsoft, which rose by 8.1%. Recent earnings from Nvidia were a notable catalyst for investors as the report showed robust growth and pointed to more strength ahead despite the impact of restrictions on sales of advanced semiconductors in China. Coinbase Global jumped 42.1% in June and was the top stock in the S&P 500 index following the US Senate passage of a bill to regulate stablecoins called the Genius Act. Stablecoins are a major segment of Coinbase's business. Oracle surged 32.1% to record highs after the cloud service provider raised its annual revenue growth forecast, driven by strong demand for its AI-related services. Micron Technology, Wall Street's favourite chipmaker this year, posted third quarter results and a fourth quarter forecast that exceeded estimates, sending its shares up by a whopping 30.5%. Advanced Micro Devices soared 28.2% after the chipmaker announced a new collaboration with HCL Tech aimed at accelerating enterprise digital transformation. At the bottom of the US benchmark 500 index was Lululemon Athletica, which traded 25% lower. The athleisure company reported declining sales in its Americas market in the first quarter. Brown-Forman, owner of Jack Daniels, tumbled 18.6% on results that trailed expectations while projecting a sales decline for the current fiscal year. J.M. Schmucker's shares tumbled 12.8% after the Jif peanut butter maker forecast annual profit below estimates. The blue chip 30 stock Dow Jones index rose by 4.3% in June, boosted by a 17.3% surge in Nike shares after the sneaker maker forecast a smaller than expected drop in first quarter revenue. Shares of big US banks rose after most cleared the US Federal Reserve's annual stress test, paving the way for billions in stock buybacks and dividends. Goldman Sachs surged 17.9%, with JP Morgan Chase up 9.8%, hitting a market capitalisation above $800 billion for the first time. IBM shares were another strong performer, up 13.8% after forming a collaboration with Parsons to design and deliver a new US air traffic control system for use by the US Federal Aviation Administration. Shares of fast food giant McDonald's slid 6.9% after analysts estimated that the rise of weight loss drugs like Ozempic could impact the company's revenue by $428 million annually and potentially up to 10% or more over time. Procter & Gamble fell 6.2% after the consumer goods company announced it will cut 7,000 jobs, or about 6% of its workforce, over the next 2 years as part of a restructuring. The tech-heavy Nasdaq index gained 6.6% in June, climbing to an all-time closing high after the latest earnings season restored investor confidence in the AI story. Shares of quantum computing soared 69.3% after CEO Jensen Huang said quantum computing is reaching an inflection point at NVIDIA's GTC Paris Developer Conference. For the June quarter, the Dow climbed 5%, the S&P 500 gained 10.6%, and the Nasdaq jumped 17.8%. The S&P 500 notched its best quarterly performance since 2023, and the Nasdaq saw its biggest quarterly jump since 2020. The Aussie share market rose for a third successive month in June, with the S&P ASX 200 index up 1.3%. Australia's benchmark equity index hit an all-time high above 8,600 points for the first time, up 20.5% from its most recent low on April the 7th. The Aussie economy stalled at the beginning of 2025, barely growing, as consumers stayed stubbornly frugal, government spending sputtered, and extreme weather events weighed on exports. Real gross domestic product, or GDP, rose just 0.2% in the March quarter, below market forecasts of 0.4%. Annual GDP growth flatlined at 1.3%, below expectations for a pickup to 1.5%, remaining well short of the 2.5% pace that used to be considered normal, with the 20-year pre-pandemic average rate closer to 3%. Data also showed Australia's monthly consumer price index rose 2.1% in May compared with a year earlier. That was down from 2.4% in April and under median forecasts of 2.3%. Crucially, the trim mean measure of core inflation increased at a slower annual pace of 2.4% in May, coming under the midpoint of the 2 to 3% target band. That was down from 2.8% in April and also the lowest reading since late 2021. Swaps now imply a near 100% probability that the Reserve Bank of Australia will cut rates by a quarter point when it next delivers its policy decision on July the 8th. 7 of 11 ASX 200 sectors increased in June. The energy sector was the strongest performer on the local bourse, jumping 9% and hitting the highest level since October 2024 as oil prices jumped amid Middle East tensions. Santos shares rose 16.2% to reach the highest level since August 2024 after it received a $18.7 billion takeover bid from an international consortium led by Abu Dhabi's national oil company. Heavyweight financial stocks ended up 4.3% in June after scaling fresh record highs. Top lending the Commonwealth Bank of Australia jumped 5% to an all-time high of $192 a share. Zip shares surged 54.7% to the top of the ASX 200 index after the buy now, pay later company raised its annual forecast on strong US growth prospects. The materials sector was the worst performer in June, down 3.1% to a two-month low on easing iron ore prices amid strengthening supply outlook from Australia and persistent weakness in China's property sector. At an individual stock level, uranium stocks Deep Yellow, Paladin Energy and Boss Energy were amongst the strongest performers, lifting between 17.6% and 29.3% after the Sprott Physical Uranium Trust upsized its previously announced bought deal financing to $200 million. At the other end of the scale, IDP Education shares tumbled 53% in June, touching the lowest level since February 2017, after the education services provider said it expects financial year 2025 student placement volumes to drop by 28 to 30%. Shares of West African Resources slumped 19.8% after the gold miner increased the Burkina Faso government's stake in Sanbrado, Kiaka and Tioga projects from 10% to 15%. Shares of Australia's Domino's Pizza Enterprises slid 17.8% to the lowest level since August 2014 after a broker target price downgrade to $24 from $37.40, citing structural headwinds for traditional quick service restaurant chains as consumers shift towards healthier food choices. In the June quarter, the ASX 200 index gained 8.9% and was up 10% for the year to June, the strongest financial year performance since 2021. Thanks for listening. For further developments on markets, please make sure you subscribe to the CommSec YouTube channel and tune into the CommSec Market Update podcast. And you can also follow us on Twitter and Instagram.